American dream. So we're frontin' up a scheme to get the seven-figure cream. Living a fast life with fast cars. Everywhere we go, people know who we are. A team of athletes with the American dream. So we're frontin' up a scheme to get the seven-figure cream. Living a fast life with fast cars.
Welcome aboard, everyone. Today is Tuesday, October the 8th of 2024. Another session, another live stream here for charting across the board where we navigate different trading instruments. However, on today's session, we're going to be focusing on the price and time analysis for the S&P 500. As you guys know, we are within the month of October, the first week culminating or entering the first week of October. And why I would like to bring this time analysis on the price action for the S&P 500 as we are heading towards October the 28th. Why this time is relevant? We're going to be navigating those variables and present why that turning point on this uptrend can be a significant price action based on time and price analysis on the S&P 500. As you guys know, all we do here is pattern recognition, which is the human activity that fluctuates in patterns and manifests into behavioral trends. And speaking of behavioral trends, and also since we are in October, it is very important to rewind, to go back in time and revisit why October is a significant month also, okay? Going back in time, let's rewind where we were back in October of 2022 before this major upward traction started on the S&P 500. These levels are important to monitor the month of October once again. So back in time, the price action that you guys can observe on the chart or on the screen as of now represent the current levels on the index. Here in this conjuncture, we have a lower lows in the price action, higher lows in the momentum indicator, signaling a class A hidden or class A positive divergence, a bullish divergence, signaling a potential turning point back then also in October of 2022, followed by a year rally all the way until October of 2023 from last year. 1 year rally, which by the way, this reminds me of a partner, quoting partner once again. Why this is a significant month? Because back then I remember in conversation with this partner once again, I was telling him last year, the end of October or early October, telling him that I could see price action on the index still navigating all the way to October of 2024. And the response back then was, well, if we go to higher levels, if we continue to climb higher into the S&P 500, I would think we will be out of business, was the response I got. Why out of business? For those of you who are unfamiliar, we were in a previous room, only to bring some memories why these levels are important, and also why this stream will be a little different, okay? The stream here is based on time and price analysis once again. The idea back then was the analysis based on the previous room was the extremely focus on the short execution at the lows, even October 2022, October 2023. However, here we are, October of 2024, after a major upward traction, okay? However, bringing back October, besides this comment or side note comment, why these levels are important. Once again, let's revisit October of 2022 to move accordingly into price and time on the S&P 500. Here on this price action, October 2022, okay? Only to bring some important levels in the price action based on the yearly cycle, okay? I have seen across the board, across Twitter and YouTube, that there are projections for similarities between the 2008, the GFC, the Great Financial Crisis, to current levels, okay? However, this same behavior has been presented by those proponent back in October of last year as well. And prior to October of last year, also in 2022, all of these arguments by them were presented over and over. And to give a brief analysis, okay, this is October of 2022, pretty much at the market bottom, cycle low of this current cycle that we are still experiencing after nearly 2-year rally, okay? So the analysis that I've been observing, once again, on social media, pretty much not an ideal scenario where to get your financial advice, rather, which, by the way, also none of these represent financial advice, but rather an interpretation of the technical information, okay? So the technical proposition that I normally observe across the board is this one. This is the one that is circulating across the board. However, this chart on the right hand side represents the levels on the S&P 500 back in, again, October of last year. Here is the date, October the 3rd, pretty much a year and a few days now, okay? The same proposition was presented by those who were calling for the GFC, okay? The same technical proposition calling that we were back then in a similar manner. However, my proposition to those, I pointed out to them that we were not in the same levels from 2008 back then. 2008 here, in an ideal manner, this one on the left hand side represent the levels back in 2008 prior to the crash, right? The price development prior to that major downward traction that printed the new lows to where at the 1.13. We're going to be navigating why the 1.13 once again becomes a key level also on our technical proposition. You guys know, those who are familiar with our analysis within the room are already familiar why the 1.13 are key levels, okay? We're going to be touching those levels later on. However, here, back then, October of 2022 or 2023, last year, I was portraying that the analysis that we're trying to prove to the majority, or to the herd at least, was that we were going to crash in a similar manner as the 2008. However, the technical proposition back then was that this time or that time in time or that price in time was different than the 2008. Okay, so these levels, up until these levels, everything matches, right? There seems to be a fractal indeed, right? However, what they were not considering here back then, because they were also calling that the GFC was there in 2023, we recaptured the 50 moving average on the weekly time frame, and since then we took off to current levels basically, okay? Here, that alone, that variable alone completely erases the probability that that time or that price in time was not the same as the GFC back in October of 2023, okay? Are the ones calling for the same technical proposition, they are the same people who were calling back here also, the GFC, the same proposition are now being postponed only, okay? Can this time be different? We never know, okay? We don't have the magic crystal ball. However, we present our technical proposition based on the legends of the past, and we respect those variables. Okay, so back in time, once again, October of 2023. Presenting the levels back then, October of 2023. This one was pretty much the lows. And the information, for those of you who are familiar with harmonic structures, this is my primarily focus in the room, among other conventional charting application, wedges, rectangles, and so on. This one, again, came here last year, October of 2023. Okay? Since then, our projections, once again, not to be the dead horse already, but it is very important to move accordingly and respect the technicals. Okay? Why? Because if you have no idea, no historical data from previous analysis, you can easily go navigate any room that you're following and check all the previous videos and the projection they made in October 2023, October 2022, and you can make your own judgment, okay? I'm talking on any room in particular that you're following. However, our analysis never changed. Of course, we made mistakes. We're not perfect, but we're trying to respect the levels and variables that we observe in the chart and react accordingly. Once again, information. Keep in mind that we are tracking the time analysis here in this case, in this context, for October of 2022. Cycle bottom. Now this one, the following is October of 2023, where we started to project that upward traction to where? To the major W formation, okay? So this point in time, the C leg of the move, or back then, a pending W formation was within the region, the time axis, on October and November, okay? Prior to that one, of course, this is a weekly structure that we were monitoring what was developing here in this segment of the move at the C point of the structure. The C point, October, once again, of 2023 was October the 29th, okay? October the 29th. Since then, our projections from the lows to the C or the C to the D, the 1.618, was the projected move that was indeed achieved when in July last summer, or this past summer, July. Now we are in October, 3 months ago. So we are within the same region. The S&P 500 continues to trade within this upward trajectory at 5,700 region, 58. We, after testing the PRC, the potential reversal zone, we have encountered a decline of 10%, okay? However, we are still unable to breach any higher. So these levels where we are currently on the S&P 500 is very significant. And why October the 29th become here a key variable for our time analysis. For those of you who are following our work for the 1.618 time projection, already are familiar with these projections. However, for those who are unfamiliar, you guys can visit our room, marble6.com, and you will have an entire picture of our time analysis, why our projections also for October the 28th not only started now, but also another projection. This is a chart from March 09 of 2024. After pretty much another information similar to this one. This is an information, however, the anchoring point for the entire segment of the move, instead of X, from May, we pull all the way to May or to March, okay? So this point in time, or this segment of the move, the X point of the structure was anchoring from this low, okay? From the entire segment of the move, where we mark those time axes A and B, okay? This is another key segment of the move to analyze until when the next time axis or the time projection will be a key turning point in the market, whether upwards or downwards. Since we have been an upward move pretty much since a year now also, or 2 years, October 2022 bottom, October 23 cycle low right here. Now the projection, this is where I told, again, once again, quoting partner back then, that I could see price action on the index still navigate all the way to where? To the week of October 28th and the 29th, okay, of 2024. There was no data point here. However, this was only a follow through of the cycle low of 2023 that I did on March the 20 or March the 9th of 2024, where the projection of the upward cycle in this case could still navigate higher to where, once again, October the 29th. Again, if you guys are interested into why these levels are important, you guys can visit our room, marble6.com, and everything is detailed there. More specifically, we can also do other sessions and explain why those levels are levels of significance based on price and time. You guys can observe that we are still now in October. This chart was from March, pretty much at the beginning of the year, where, again, the comment was that we could still navigate towards still navigate higher up until the week of October 28th and October the 29th, pretty much a week before the US election. So once again, to give a recap, October, or the proposition that many are portraying now, may be different, but only I wanted to give this, I wanted to call their attention. Why? Because the same proposition was presented already last year and also the previous one to 2022. Therefore, postponing an analysis over and over, at some point you may hit, right? You may have a valid argument that indeed may seem to be the case that the proposition for the GFC, the chart from 2008 on the left hand side, okay, comparing to the prior low of during October of 2023, did not play out. Okay, why? Because we are now much higher than those levels that these technicians were, or pseudo technicians were, arguing that we were indeed within the GFC. Now may be different, right? Why? Because we have new variables, new data points in the price action that we are constructing and gathering. And of course, as more data continues to develop on the macro, which is a weekly and the monthly time frame, those same arguments may be different now. Okay, so let's go back into the current price action on for the S&P 500. Okay, going back into the S&P 500, let's go back here where we are. Okay, a recap. Why October? Once again, these lines, the time axis, are portrayed here in the price action. October 2022 cycle low, followed by October of 2023. Now our projections, we're monitoring since March now, okay, will be for the week of October 28th of 2024. Are we now nearing a cycle low or a cycle high? If I show this chart to my daughter, okay, I would guarantee that she can point out which one are the lows and the highs. Okay, I'm not suggesting we are entering a cycle high, but giving the variables in the price action, okay, giving the variables in the price action, our technical proposition for this major W formation was indeed achieved. For those of you who are unfamiliar with this type of formations, I want to make a comment here why these levels are very important. Oftentimes, at the first test, we normally have a reaction, right? Which indeed occur at those levels, at the 1.6, 150, 700, another short execution back then, okay, that manifested into a 10% decline. Reactionary move, okay? Now, can this level or this current price action that is constructing here on the S&P 500 be the major turning point during the week of October the 28th and 29th? We're going to be, of course, navigating those same levels in the price action within 2 weeks from now, okay? Because the same technical proposition was presented over and over and over and continues to be here. However, I only want to portray my technical arguments here that our analysis continues to be for, or has been indeed respected since pretty much last year, okay? Now, there are other arguments to the 6,000 region that, of course, has been also within our radar. For those of you unfamiliar, by the way, the 6,000 region has been in the card. Also, when was portrayed, or when was this analysis presented? Back in December of 2022, okay? However, before reaching that level, you guys can observe here in the price action, this is an ABCD reciprocal that also is navigating into other channels now. But again, remember where this chart comes from, 2022, the 6,000 region. However, since we're not there yet, can we still navigate to those levels? We are going to see, because so far, what I observe in the price action for the S&P 500 in the current levels, or on the current levels, is that we are pretty much going sideways, okay? Sideways to neutral as of now. However, if I turn this chart here, I need to portray here a similar action here. What I'm looking here will be the same argument that I was looking back in 2022 for this cycle bottom, okay? Rounding formation are normally the type of reversal patterns, either for a bottom price action or a top. Okay, so if that's the case, if we're building another cycle bottom or cycle high in this case, it will be pretty much the same context that we presented back in 2022. Now finding potentially that anchoring point for the cycle top in this case. Okay, also if we flip the chart, if we invert the chart, the same proposition, right? This one was the cycle bottom or top in this case if we invert the chart from 2022, and now we're constructing that shape formation or the same structural formation as a rounding bottom. However, in that case will be pretty much a rounding top. We will see. Let's go into October 2000 or October 28th and 29 and see what the price action will give us within these levels. Okay, we do know that we have our projection to 6,000 region, but we're also aware that the current levels that we are trading on for the S&P 500 remains at a key turning point here. Also within the momentum indicators on the monthly, okay, this is something to be aware of. We are indeed printing the divergence, negative divergence on the monthly, okay, as well as the RSI presenting lower highs on the previous high. Okay, this is something to be aware of. I'm not calling for a major crash whatsoever, but only respecting the technical proposition that we presented back in 2022, 2023, and now approaching the key turning point in October 28th of 2024. Let's revisit this chart within the next 2 weeks and see where we are. Okay, everyone, thank you for being here. If you want to know more about why October 28th is a key turning point in the market, you guys can again visit marbob6.com. We're going to explain based on the golden ratio, the 1.618, why those levels are important. Everyone, thank you for being here, and I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. We have been indeed within a sustained rally without any meaningful turn, but let's be aware and prepare for anything. I'll see you guys on the next one, and stay positive. Cheers.